It's Sunday, the 14th of January 2018. The gold development sector is a sector that I pay a lot of attention to, and I think where there is tremendous value, particularly given where the gold market fundamentals are at from a broader point of view. There's not a lot of quality, a lot of the quality mines from 5-10 years ago, those resources are getting depleted. And they're the ones that have average costs at sort of say US $700 an ounce, and a lot of the new projects that are coming online don't have the same quality. So projects that are able to go to that sort of lowest quartile, which is about, I think is about $650 US, or maybe 700. Companies that are able to produce at those levels are going to be highly sought after as takeover sort of plays and consolidation plays. So a few in that category. I've talked about a lot of these before. One is Cardinal Resources. I've been following this for a long time now, almost, 2 years. It's a long time for me anyway. But, that had that tremendous run in 2016 and some metallurgy issues, on the original resource update or maiden resource announcement, and since has climbed all the way back up. And then the last couple of months it's been sort of falling and just a bit trendless, lack of volume, and that's, it's very tightly held stock. But just the main thing about this company, I've got their latest presentation here. I've gone through these presentations a few times in the past. So market cap's about that sort of 200 million. They do have a lot of options on issue with an expiry date of September 2019. So importantly, when you want to value this company, you really sort of have to do it on a fully diluted basis. And a lot of those options are only at a 15% exercise price, but their shareholder base, very strong. Goldfields has been buying up this stock all year. A lot of it, they were buying it sort of above 65, 70 cents. So they don't really appear to be, hugely concerned about price. And when someone like Goldfields is buying, I think it's really important to take note, because they know, they know the quality of their portfolio, and that's sort of, they know that this is a quality resource, and that they want to be involved or potentially or have that sort of optionality later on, which is exactly what they've done with Gold Road, where they bought a 50% stake there at a really, really attractive levels. But this resource, 4.3 million ounces of gold in the indicated category. There's a resource update due probably in the next month for Namdini, and that should lift a lot of these inferred resources into the indicated category as well. So you could be looking at maybe as much as 6 million ounces in indicated resources by the end of the first quarter of 2018, and that's just to show that this is the quality of that. You can see here the Cardinals put together sort of a representation compared to a lot of other development projects around the world, and there it's currently the third largest resource under development. I'm not sure if this is a complete list, but it's obviously an extremely large resource, and probably will have one of the the highest level of, I don't know what the stage of a lot of these are. Well, Gruyere, for example, is Gold Road, so they'll have a resource bigger than what Gold Road did when they in the indicated category, say. So it's extremely undervalued. I think they had those metallurgy issues, but I think just the quality of the size and scale of this resource is just very few projects in that sort of 5 million ounce category that can be bought out by major companies, and I think they're going to attract a premium at some point in the future. Gold, I don't like sort of valuing things on resources necessarily, but it all comes down to what the production costs are. But as I said, I think Cardinal is probably going to be in that near the lowest quartile, maybe a little bit higher, maybe sort of $750 US an ounce, which is still extremely profitable for a resource of this size. And they've got a lot of good exploration potential and a good land package, and that was one of the reasons cited by Goldfields for buying into Gold Road. They wanted that, they want to have that scale of land package that has good prospectivity for a 20 year plus mine life. So even after they mine that, say, a 15-year resource, they've got good potential of ongoing fines. So that's one of the ones that I really like, and I've been buying into as it's dipped below this sort of 55 cents. I've been buying in the last 4 or 5 weeks. Goldfields having that stake, I'm a little bit skeptical that maybe they're sort of controlling the share price somewhat. They it only trades a very low volume of shares relative to how many are on issue, so it's tightly held. But that works both ways, and I think when that, assuming those numbers come out, that in the scoping study that's due soon as well, and that those costs and the capex numbers are decent, I think this will get bought up, and when money starts to come into the exploration, the development sort of stories. So you can see here the key is this low strip ratio, targeting 1-to-1 strip ratio. You won't find many mines that have that sort of strip ratio. So that's incredibly important for the mining costs. Single pit as well. This starter pit, they released some results of that. Really good grades, sort of 3-4 grams a ton for the first 40 meters. That should have tremendously low costs, which is important for the early cash flow. So I think once the financial numbers come out, maybe this starts to attract a lot more attention as people start to work out the quality of the project. I mean, a few people have made estimates, but you need the company to really come out with the feasibility numbers. The other one that I'm very into is WAF, West African Resources. The chart on this looks extremely strong. It's looking like it wants to break out to sort of above its 2016 highs here. Extremely good exploration results, drill results that are coming out. Their resource gets deeper and deeper, extremely high grade, and they're looking like they could be a kind of a tier 1 asset as well. And I'm not expecting. I think they'll get bought out too. I won't go into all the reasons why for that. I've talked about it in a video about probably almost 6 months ago, so you can have a look for that one. Nothing's really changed since then, except that the resource is just growing and growing. Their feasibility numbers will be getting updated probably in the next 4 months, and then I expect them to move to financing, and that's when a potential takeover could take place as well. But they've got a lot of there's other players nearby who would be interested in this resource as well. But as I said, go back and have a look at the video I put in I think it was in late July maybe. The other one, I think I probably talked about DCN in these videos maybe 12 months ago. I've started buying in when it sort of, after they had a botched sort of capital raising. I was buying in at sort of these below 220, and I bought all the way down to near the lows, and sort of probably had an average about $1.80, I think. And that's had a really good run since they've been in the last 3 or 4 months. Tremendous. It's a good example of why you want to buy into companies that have a low number of shares on issue. When they start moving, they move quickly, and the market just wants into those companies. They don't really care too much about price in the same way they would if it's a smaller company. That they want into those high quality production stories, and DCN's up sort of 50% since October there. So I've started lightening my position a little bit around this high 290s, $3, but I'm still holding a good portion here. And I think as they've de-risked this asset a lot, and they haven't really put a foot wrong. Seems very well run. Look at the chart, looks excellent. Even if it's starting to get a little bit overvalued from a risk perspective, if you want to be careful if they don't hit their feasibility forecasts, it might be a good time to take some off the table. But I'm holding on to most of mine, thinking that there's still good upside here maybe back toward the all-time highs in that 380, 390 sort of area. The other play that I'm looking at, and I've been putting videos out for a while on, is Gascoyne Resources. It's a smaller one compared to DCN. It doesn't have that 200,000 ounce sort of production profile, or potentially compared to West African or Cardinal. They're all in that 200,000 ounce sort of category. I don't think Gascoyne's going to get taken over by anyone, but I like the way the company's run, and I think it's really I like the last couple of weeks of price action here. this 50 cent level's been a bit of a supply zone, and I think that's due predominantly to the capital raising they did in March, I think it was last year, and I think that was at 50 cents, and it's created this sort of overhang here of trap sellers, but they're gradually being eaten through. This looks like someone, you know, of decent size wanted to buy in, and I think they're probably still lurking in the background and sort of just holding here, waiting to see how much extra supply is available at this 50 cent level before it gets pushed higher. I think it'll probably move fairly quickly when that level at 50 cents breaks. Yeah, they're only a smaller production profile in that sort of 110, 120,000 ounces, but they seem to be able to add incremental ounces at low cost, good exploration, well run. They're gradually been de-risking their project. Some of the financing took a bit longer than I had hoped, and that's why it was in this sort of malaise in the second half of the year and just couldn't really get up off the canvas. But as I said, this looks like a good little consolidation here, and then potentially can move back toward this sort of 60 cent zone. And as production comes online, that's sort of due in about May. If they start hitting their numbers, that's going to be important. But it'll be the same sort of thing. Like even though I like this company, I don't want to have all my money sweating on that first production report, because, you know, there's been a history of feasibility studies not delivering correct numbers compared to actual production. So I want to take some off the table at that point, and that's sometimes the market gets a little bit misled by management and starts to forget about the risks in you know, mining. But I think Gascoyne, this deposit has been mined before, 15 years ago, but some of the stuff like metallurgy and is fairly well known, and I think they will do fairly well once production comes online. They've got a good second project in Western Australia as well, sort of where they could potentially set up an equivalent size project in the next 2 or 3 years. So they're a good little play, I think, and I'm hoping for that one to move back up toward that sort of 65 cent level in the next 6 months as production comes online. So they're 4 plays that I own, probably some of my largest positions in those companies. As I said, I think a lot of the bigger ASX producers have had a lot of their runs. They'll still go higher as if the gold price goes higher, but the real money that can be made is in these development stories and picking the right companies. And the common theme with all these companies is good management, and I think that's an important factor. And that's where when I say about good management, I'm trying to follow an approach that I think the bigger investors use, and trying to get in before those guys, and when the money starts to really flood in, and they tend to be not as price sensitive, so they'll try and pick winners as well, and I want to be in the ones that they're trying to pick. So I'm trying to follow an equivalent investment approach that some of those guys use. Doesn't mean they're better investors, but it means they're the ones who drive the market in a lot of these stocks. So yeah, they're 4 plays that I'm following, and I've been holding for a while. Some of them, it's been a pretty weak 2017, but I'm pretty hopeful that as they come online in 2018, in the case of Gascoyne and DCN, that they'll go higher as well.